Okay, so in this video, I'm going to show you how to make the income statement. And accounting 251 most likely may or may not come out, but they need you to know the income statement, right? It's very easy. They give you all of the stuff that you need to put in the income statement. It's so easy. So I'm just going to put all the stuff that they give you, right? They give you a sales figure of 950,000, right? They give you, they give sales, then they give you a direct material. So I'm just going to put DM, 100,000. Then they put direct labor, let's say 50,000. Then your factory overheads, so I'm just going to put factory overheads, let's put 10,000, right? And then what else to give? Okay, they'll tell you administration expense. Well, let's put administration 30,000, and they can give you selling and distribution or whatever, right? Okay, with this we need to make an income statement. So the first thing is an income statement we need to do is to say sales, right? Sales. And we need to put a figure now. Your sales amount is 950,000. 950,000. Then we need to work out your cost of sales. So cost of sales. This is the format of income statement. The cost of sales figure, we're going to minus it. But here's the thing. We do not know the cost of sales figure. If we go back to accounting, how do we work out cost of sales? It's your opening stock plus purchases minus closing stock. But because we are a manufacturing company, we don't say purchases. We say our total cost of products we made. So it's very easy actually. So to work out this figure, cost of sales, we're going to be doing it in this income statement actually. I'm going to add all the numbers and put it up there. So I'm just going to do it in different colors so you can see. So you see, what is your total product cost? Product cost is three things: direct material, direct labor, and factory overheads. So I'm just going to put direct material. The amount is going to be 100,000. So I'm going to put in the right hand side. I don't want to confuse it. Then you got direct labor. Then you got factory overheads. Right? Now obviously you write it in full, but I'm just doing it for time's sake. So 50,000. And then 10,000. Okay. So what now you got here is the total amount of products manufactured. So opening stock. Now if you had opening stock over here, right? If they told you opening stock is 5,000, you'll put over your opening stock is 5,000 in direct material, direct labor, factory overhead. If they told you closing stock, so actually let's put closing stock here. See, they can sometimes give you opening stock, they sometimes don't give you opening stock, but I'm gonna put your closing stock. Let's say 10,000. So because they put closing stock 10,000, we're going to put their closing stock, and obviously closing stock is minus, right? It's minus 10,000 because the format is opening stock plus purchases minus closing stock. So obviously there was no opening stock, so that's fine, we leave it out. If there is, we're going to put opening stock here, pluses minus closing stock. This will work out cost of sales. So what's 100,000 plus 50,000 plus 10,000 minus this? 160,000 minus 10,000, that's 150,000. So your cost of sales is 150,000. There we go. You see how I created this thing over here? After this sales, cost of sales, it'll give you gross profit. So we're gonna write gross profit over here. So gross profit, what will that be? It'll be 950 minus 150. That's 800,000. Right? 800,000. And then after your gross profit, you need your operating expenses. They give over here administration. So we can write non-production cost. Non-production cost, we can write period cost. Let's write period cost. Period costs are all that needs to be in the income statement for expenses. Remember, all this we did is product cost, these three things. So now it's period cost. Period cost is an expense. You expense it. Selling and administration. Selling and distribution, then you get administration. Those two departments, if they have over here, you put it under period cost. But here they only give administration, so admin 30,000. 30,000, and there we go. Gross profit minus this will give you your. Now it'll either give you a net profit or operating profit. Both of those are the same sometimes when you deal with manufacturing, but the difference between net profit means it's the profit after tax, right? But in this case there were no tax, so it's operating profit. So, or you can write net profit. You'll see them sometimes writing net profit. To be honest, they won't mark you down because you don't know if they gave you tax in the what is called in this figure, in this question. You don't know if the business has tax or not. So whether you do, it'll be same. So gross profit minus your that's it's 330,000, yeah, 770,000, and there we go. Your operating profit. Now in the exam, obviously you wanna do your making an income statement, so put the table and whatnot. But yeah, that's your format. So sales, to work out your cost of sale. Hey, isn't that cost of sale disappeared over here? Where's my cost of sales went? Oh, there. Sorry, I'm looking at this. Yeah, this is my whole income statement. So sales, cost of sales. You get cost of sales is your direct material, direct labor, factory overheads minus your closing stock. If there's opening stock, you'll put over there. And yeah, it's easy, right? Your only expense and administration and done. Now, what are the other ways they can give you this like closing stock? They can just give you, they'll say, closing balance of closing stock is 10,000. We'll say minus 10,000 under closing stock. Now, if they say finished goods stock at the end of the year, or it's the closing inventory of finished goods stock is 10,000, you'll also minus 10,000. So if they give you finished goods stock or they give you closing stock a balance, right? The balance of that account, you're going to minus it over here, put it in minus, because those are the products sitting in your business that's not been sold. So obviously all these are made, all this are not sold. You minus, you get how much is sold. Opening stock plus purchase minus closing inventory. So this is the, yeah, easy, right? This is the income statement of accounting 251.